selling put options. Because who is the Patsy? Whether Warren Buffett said it first, whether someone else said it first, who cares who said it first? Let's look at it. When you look around the stock market, if you can't see the sucker, you're it. I'm going to repeat that for the benefit of all my fellow human beings. Look around the stock market. If you can't see the sucker, you're it. If you've been playing the stock market game for a while and you still don't know who the Patsy is, you're the Patsy. If you've never played the stock market game before and you don't know who the Patsy is, you're the Patsy. Do you know what a Patsy is? A Patsy. A person who is easily taken advantage of, especially by being cheated or blamed for something. A person who is easily taken advantage of. If you look around the stock market game, concerning the stock market game, if you don't know who the Patsy is, you're the Patsy. I get it. I'm taking some liberty with this. That's our discussion for today's video, my fine friends. We're going to be discussing who should be the Patsy and how selling cash secured put options puts you in a position that you limit your likelihood of being the Patsy. Now, if you want to be the Patsy, then by all means, ihavesuccess.com is not for you. If you want to be the Patsy, I'm not going to tell you where to go. You'll be able to find it easy enough. If you want to limit your chances of being the Patsy, and you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options on stocks you'd be happy to own. But how would you know if you're happy to own them? You got to watch this free YouTube playlist. You got to get these downloads. You got to learn the fundamentals of analyzing companies' financial statements. Learn a little bit about stock chart analysis, or at least how to set them up so you can start practicing. You can find that stuff out there. And it would be good for you to know 3 keys to success with put options to really help yourself not be a Patsy. So at the 4-minute mark of this video, I'm going to leave you a link to another video that gives you 3 keys to put option success. It's at the 4-minute mark. It's going to be popping up right here in less than 5 seconds. 1 second. Boom! There it is. Hopefully you can remember that 4. Let's think about this again, though. Look around. Look around. Look around. If you've been in the game and you don't know who the Patsy is, you're the Patsy. Do you have a 401k? You're in the game. You ever bought a stock before? You're in the game. So whoever said this quote, however the quote really goes, who cares? This video is not about getting the quote exactly right. It's about understanding that the stock market is similar to playing poker. And if you really don't know who the Patsy is, you're the Patsy. So how do you limit your chances of being a Patsy? And I think this can really, really help you. This is forexfactory.com. You can you don't necessarily have to look at all this stuff if you just want to be selling cash secured put options on stocks or want to be holding, maybe do the wheel strategy or something like that. Depends how deep you want to go into this game. But Forex Factory, really easy. You can tweak these settings here. Right now I just have it set up for like I think this is medium impact. Oh, excuse me. Low, medium impacts are in here and high impact, and it's just from the US. So maybe tomorrow this information could move the market. But look at this. All these FOMC members, these your non-elected government officials here, those people could potentially move the market. We got more of these non-elected controllers of your life speaking through there. So check out Forex Factory if you want. And over here at FinViz, this is free. It definitely has a lot of ads that pop up on it. This is a heat map. You can click on this bugger, as they say in Hawaii, and you can change this from like 1 day performance. Let's look at the last 1 week. Get out of there. You can't easily delete that though. I'll tell you what, you cannot easily delete that. So let's forget about this. Let's go back to 1 day and bring me back home. All right. So we see we got a mixed bag over here. If you look at this every day, you don't have to study it or whatever, but look at how much green versus red, green versus red, green versus red, green versus red. And you do that day after day after day. Since I've been doing it day after day, you know, there's overall, today there's more green in here. Well, look, there's more, almost 62% at new lows. 53, a little bit over 53%, still under the 50-day moving average, and a little over 58, barely under, a little bit under 60% still of the market, still below the 200-day moving average. So we don't have a big, a lot of movement of all the stocks going up. When we look at this here, this here, this here, this here, or in a longer time frame, right? These charts we're looking at right here is 1 month, each candle represented a day. But what's moving these indices up is not a whole lot of stocks, right? Because we see here that when we look at stocks in total, almost 60% are below the 200-day moving average. That's not really looking good if you wanted to be, if you were bullish. It'd be looking better if you were bearish. Wells Fargo, of course, getting in trouble again. What's new, right? If you put money with these guys, you're just silly. Wells Fargo fines. Talking about not being the Patsy. Oh, man. Look at this. Look at this. Fines to date. Fines history. Look at this. Fines paid, man. Wells Fargo, you don't want to be a Patsy? Do not put your money with Wells Fargo. Oh, look at this. Going back to 2022. Look at this. Order to pay $3.7 billion for, what is this? Illegal something, right? Look at this. That's 3.7. Look at this. They're getting a $250 million fine for something else. Settlement includes $2 billion for customers over something. Look at this. Had to repay $16 million. Is that the three here? That one looks like it's the same. So these guys, you put your money with those guys. You might as well just say, hey, I want to be the Patsy. Let me bank at Wells Fargo. All right? It's a really it's bonkers. It's bonkers that these yahoos still gets here. Buffett apparently selling shares in 2 different banks. That's an ad. What is this? Market wrap. Europe, Asia. Still over Asia with China stuff. Oh, futures. People are just kind of waiting for these debt ceiling negotiations. I showed you, I think I showed you this before. This debt ceiling stuff, this is not new. It's not a surprise. It's so commonplace that the first time around this happened, This guy here made a satirical rap over making fun of this whole situation. Raise the debt ceiling. Raise the debt ceiling. And then look at a year ago, raise the debt ceiling again. Right? This is 11 years, right? 12. This is like clockwork. Instead of, 12 hours on the clock, 12 years later, the exact same thing happens. We got to raise the debt ceiling. We got some, you put the word in there for these people that are running this country. Both sides of the aisle. I got a left hand and a right hand, and I give the finger to both of them. So, okay, so what is this? What do you got? 14 million mortgages, refinancing during pandemic boom. Makes it very difficult for homeowners. I have to probably look at that a little more. Let's get to the meat and potatoes of this video, though. All right, the meat and potatoes of this video is how do you avoid being a patsy? Like if you only know how to buy stock, man, there's a good chance you're going to be the patsy. So it's good to learn how to sell cash secured put options. It's a way to buy stock. It's also, when you're selling the put option, it's not a way to buy insurance. It's not insurance. But when you are buying the option, it is insurance. So basically, a put option is a contract to buy. If someone's buying, that means someone else is selling, right? For one person to buy, one person to sell a certain amount of shares under certain conditions. What are those conditions? They're adverse conditions. You use a put option as protection. So you can buy stock with put options, right? Because what is a put option? It's a contract to buy and sell. So you could acquire stock by being the person on the side of the put option contract that's going to be acquiring stock. And you can also insure your stock. That's basically what it is. For example, let's pretend we're looking at the S&P 500, right, via SPX. Someone could buy a put option, theoretically, as long as the strike price exists right there, probably does. But someone could buy a put option here saying, hey, I want insurance at this 4,050 strike price. Meaning that if SPX goes below this number and it stays below that number at expiration date, even if it goes all the way down here to 3,950, someone is buying stock from you at $4,050, which obviously has some value because the market price is selling for less than that. So that's the basics of it. You need to know more details of it, but what ends up happening is that it brings up the level of your sophistication. And when the level of your sophistication is up, it's less likely you're going to be the patsy. Now, please hear exactly what I'm saying. I'm saying it's less likely. Less likely. I mean, come on, you're playing against people that have the deck stacked against us. Us, right? Us. You and I. We are playing this game against people that have the deck stacked against us. Want a little bit of evidence of that? Look at how the relationship between Sam Bankman-Fried and how eventually his name is connected with Gary Gensler of the Securities and Exchange Commission, who's supposed to be regulating stuff. How about Bernie Madoff? He was regulated. You know who Bernie Madoff is? He was regulated. How come the Securities and Exchange Commission didn't catch him? Or maybe they did. You ever think about that? You ever heard of a corrupt cop? You think there can be corrupt Securities and Exchange people? If you don't think so, then you go sit on the side where the patsies play. So you learn how to sell cash secured put options. And when you do that, you're not just randomly selling the cash secured put options. Learn how to pick some decent stocks. You pick those decent stocks, and then when you realize that when you got a stock that should be relatively good, and you have get a fair way of valuing what this stock is, what the stock should be worth. For example, let's say I don't know, I know stocks. I don't know something else in that category. Let's say the price of tuna fish. Let's say the price of tuna fish nowadays is $1 a can. Right? If you see it at $10 a can, you know something's awry because you know the regular market price is at $1. And if it's on sale for 50 cents, you know that's a good deal, so you snatch it up. Well, when you understand that same thing with stocks, you can understand how to value them. Then if a stock has a intrinsic value of, let's say, 4,000, then you're not going to be paying for 4,150. The Patsies will pay. Make yourself less likely to be the Patsy. Go back to this. Look around the poker table. Look around the stock market. If you can't see the sucker, you're it. Look around the stock market. If you can't see the sucker, you're it. 401k, Wall Street collects fees no matter what happens. No matter if the stock goes up or down, those mutual funds do good or not, Wall Street gets paid. They win out of that, don't they? Who's the Patsy? How about when you're buying stock that's overpriced? Who's the Patsy? If you don't know how to figure out if it's overpriced or not, who's the Patsy? If you don't know how to buy insurance for your stock, who's the Patsy? Let's say you want to buy a particular stock. We'll go back to this one. Let's say you want to pay this price for it. And you could sell this strike price right here. It touched it, didn't go below. But you took in money. You sold a promise. You took in money. You took in premium. But let's say it doesn't, and let's say it's up here now, right? And let's say your contract expires worthless. But you want the stock. You know what else you could do? You could sell a put option right here. How about that? What if you thought that it was intrinsically the value was 4,200. So if you pay anything less than 4,200, you feel like you're getting a good deal. Well, what if you sold this put option right here? You're guaranteed to buy it at 4,100 and you're getting paid a premium. Or you could do it right here. You know, there's a variety of ways to do it. Right? You can keep it simple, you can make it a little more complex. But you have to learn how to do it in order to bring your skills up to this next level. Learning how to do it, which I recommend paper trading. Someone left a comment yesterday talking about, why don't you put real trades on here? The number one reason is I want to support and encourage you to paper trade. Just like if you wanted to learn how to fly a helicopter, I would support and encourage you to learn how to fly it simulated before you actually took to the sky. Just like if you wanted to learn how to, if you wanted to actually compete in MMA, I would support and encourage you to go to a gym and punch a bag before you punch at a human that punches back at you. Now, whatever you want to do is up to you. You can, if you want to learn to fly a helicopter, in the very first day, you just want to step into the helicopter and go for it. I don't know if they will legally let you, but if you're not my friend or relative, I don't care. I don't think it's a smart move, but there's a lot of things that people do that aren't smart. I don't have control of that. And if you wanted to, start your MMA career by just getting in the ring, no, simulated training first. You just wanted to start doing the real thing of fighting. Go for it. I wouldn't do it. I wouldn't recommend my friends to do it. I wouldn't recommend my family members to do it. I don't know a whole lot of professional MMA fighters, but in my time of living in Hawaii, I've definitely had the pleasure of being punched in the face by a few in sparring sessions, right? I'm sparring with them, right? I wasn't like I'm out on the street, and I'm not an idiot that says that, simulated training is no good, so I'm just going to get in the ring and start fighting. No, these guys were cleaning my clock just in the practice room. So my point of bringing that up is that if you want to test it out, I can make some phone calls for you, and I'm pretty darn positive I can get you in the ring with a person that has a professional MMA card, and you can just start your career by getting your clock clean like me. But probably the difference is you're not going to be coached by the same coach that I had who was coaching these people, and they're probably just going to try to knock the teeth out of your mouth. Just like when you go into the stock market, no one cares about your money. They're looking for the patsy. So who's the patsy? The patsy are the people that aren't paying attention. So it's up to you to get yourself out of the patsy seat. And it's not easy. You know why? Because you don't have a phone. You can't call your uncle to call his cousin who can call Gary Gensler. More than likely, if you're watching this, you have no connections with Gary Gensler. You don't even have a cousin, once removed. More than likely, you don't. More than likely, you're not Ken Griffin's buddy. You're probably not Ken Griffin. More than likely, Ray Dalio's not going to pick up the phone and make calls for you. More than likely, no one's going to do anything for you. So you got to do it yourself. Remember, at the 4-minute mark of this video, there's a video about the 3 keys to being successful in put options. Watch that video and implement that stuff. You might be surprised what it's about. You probably think it's going to be about the Greeks and blah blah blah. No. Something else, something on a bigger fundamental level. Watch that stuff. Lastly, I'm going to wrap this up with showing you here. I've got these 2 positions open. I've got 2 contracts. How do I know it's 2? Because this is quantity of 2. On this ticker symbol, XLF, it is a financial ETF. This is not a stock recommendation. Like I don't sell this in my personal account, so I'm not recommending you do it in your personal account. I'm recommending you do it in your simulated trading account to learn the trade dynamics, to learn the trade mechanics. But don't 100%, this is probably not suitable for you. Anyways, it is definitely suitable. It's not suitable for you with real money. It's definitely suitable with a paper trading account. So I'm short 2. Short means I sold 2 contracts that expire in 4 days. May 19th. It's a put option. Strike price of $30. Right here shows me that XLF is trading around $32.15. So in the next 4 days, if this ETF ticker symbol stays above $30, it's probably going to expire worthless. And with your American style options, there's a chance you could get assigned. Well, maybe it's any type of option, but I mean, there's a chance you could get assigned, even if the stock is trading over your ticker symbol. And with American style options, there's a chance you could get assigned before it's past its expiration date. But before it hits expiration date. If you're going to get assigned before expiration, this number is probably going to be lower than this number. And a paper trading account, I don't think that ever happens anyways. But just realize, like, generally speaking, the way it goes is upon expiration, at the end of 4 days, if this number is above this number, more than likely this is expiring worthless. And over here, I got this probability. There's less than a 5% chance, by however this is determined, however the computer has this algorithm set up. It's showing that there's a 4.23% chance that XLF is going to be under $30. So it's probably not going to, there's a low chance, right? But if it somehow goes under $30, then what am I going to do? I'll tell you what I'm going to do. I'm going to do nothing. And the broker is going to do something for me. The broker is going to take about $6,000 or exactly $6,000 out of my account. Why $6,000? That's a great question. Because I'm buying $30 per share. How many shares? Each contract controls 100, and I got 2 contracts times $200. 6,000. The broker is going to take out $6,000 out of $6,000 simulated dollars out of this account. It's going to move those somewhere else. I don't care where. Doesn't matter to me who it is. And it's going to take that $6,000 and it's going to replace it with 200 shares of this paper asset called XLF. And same thing down here with XLU. This one is also not a, same disclaimer counts for that. XLU, utilities, one contract, 11 days left. Looks like there's almost 30% chance that at the end of this contract period, 26th of May, that XLU will be below 67 bucks. You can look at the charts real quickly. Take a look at that. So here's XLU. Boom. Big drop. We're down here at 67. So for this one, I have longer time. Right over here at XLF, I don't have much time. What was our ticker? Our strike price? Sorry, strike price down here at 30. It's not even on here. It's all the way up here. It would have to until it breaks this low, which is $1.26 above my strike price. I'm not even concerned. Like, it's not only does it need to break this low, but before it breaks the low, it's got to kind of get through this resistance, and then it's just got to break 31.50. So this one, pretty low chance. And look at our volume, just like real weak volumes. It's not a lot of shares trading hands. But over here on XLU, look at that humongous drop we had today. But here at 68, one reason why I sold to 67 is I see this resistance, or excuse me, support right there. Now, in order to see that, I looked at more than just 1 month. But look at this, we got a lot of volume. So tomorrow, if we get some follow through, let's do this. XLU. Now, right now, we're looking at a 1-year chart on the daily. So, see all this? Kind of, look at this. On right around that 67 area. Trying to get above it. So, look at that right there. Price is overlapping. It comes up again. Boom. Hits it right there. Look at it right there. I kind of can see it right there. And let's move over here. Looking at the weekly chart. 5-year, 1 week. So yeah, it looks like it could drop. You know, looking at the weekly, looks like it could drop down to, on a weekly basis, looks like we shouldn't be surprised if it drops down here to 65 on the weekly. Am I saying it's going to drop down to 65? No. Nope. I think even at 66, we got some resistance. But our strike price is at what? Was it 67? Yeah, that's right, 67. So if I remember right, one reason why I sold 67 is just to try to get us in the game a little bit, right? To see what would happen if we get a sign. So that's why you definitely do not want to take any of the stuff that I'm doing here in this paper trading is actual trades to put on in your real account, because this is we're being a little loosey-goosey in order to try to learn some dynamics and show how to do things. So that's what I have going on right here. Now, what if this drops down? We're at 68. What if it drops down to 66? What am I going to do? Tell you what I'm going to do. I'm going to do nothing. I'm going to do the same thing that I'm doing over here. And if at the end of this contract period, if it's below 67, I'm going to do nothing. The broker is going to dip into my account. I'm going to take $6,700, right? How did I get that number? 67 times 100. It's going to remove $6,700 out of probably here, which all these numbers will change, but the cash is going to flow out of here. It's going to flow somewhere else. I don't care where it flows because it's flowing out of me. And what's going to flow into my asset column is 100 shares of XLU at $67. And I'm okay with that. I'm okay with that. I'll be collecting a 3.18% dividend. It's probably going to be paid out quarterly. Yep, quarterly. And then what I'll do is I'll start selling some covered calls. And since I'm buying it at 67, I'll look. We got 11 days till expiration. 11 days to expiration here, right? And right now, let's take a look at the 32, just because it's not a weekly and it's about 30 days out. So buy for 67. Look at this. What if I were to sell for 69? Maybe bring in about $100. 70. Now I get it. See this, that number? That's the number you can sell at. That's the number you can buy at. That's kind of a big spread. It's not the best. You could say, hey, look at that slippage, blah, blah, blah. This is the best stock. Yeah, I know. I get it. And that's what I will do. And I kind of hope that happens so we can see what happens. Bought at 67. Sell covered calls that are higher than 67. I could sell the, look at this. I could sell the 68. If I bought it at 67, I could sell the 68 in the money at the moment. Get paid possibly getting close to $200 maybe. And then looks like almost like what's going to happen? Am I gonna get out at is it gonna get called away from me at for $100 capital gain? Maybe. I've actually never never tried that, but that's the beauty. What I normally do is like I'll just sell out of the money myself, but you know, that's just another thing I guess to think about. And I have an options class tomorrow with basically a 25-year professor of option trading, and I'm going to ask him that, and I'll find out for sure. With that, ladies and gentlemen, here's really the key to it. Your good buddy Brent, I don't know it all. I am not the master. I'm not the 25-year stock option professor that's the master of selling and buying in the money options, which my professor is, a master of selling in the money and buying in the money options. Right? What am I? I'm a guy that's been selling cash secured put options and covered calls for I don't know, getting close to 10 years or so. My life is easy with this. I understand it. I understand it like tying my shoes. The thing about it is it's easy, but it's not simple. Like, you got to understand what's going on here to some degree, right? You got to be able to navigate an option chain, and you got to be able to kind of like, I guess you don't have to, but it behooves you to kind of know what open interest is, volume, what's this high and what's this low mean? How do I use that? How do I use this in conjunction with bringing some money in? How can I use the delta? Right? What are the strike prices? Where do I find these buttons to click? What's the difference between selling 67 days, 95 days, 613 days, and 4 days? What stock should I use? How might I relate beta to this? What about shares? What do I want to do with dividends? What about the bid-ask spread? Things like that. There's some things you want to know. What is a put option? What does assignment mean? All these type of things. But once you know this stuff, it's easy. You're basically selling options on stocks you want to buy that you have enough money to buy them. Right? You want to buy, let's pretend you wanted to buy XLU and you had $5,000 in your account. Well, then you shouldn't be selling the 67 strike, because to secure this with cash, you need $6,700. If you only have $5,000, then you got to find a stock that you can sell a put option on at the $50 strike price. What if you say, well, there's no premium here? Well, then go out longer in time. Still no premium at 11 days. Step it up to 30 days. $50. Still no premium. You want to go 46 days? Still no premium. Maybe you pick another stock. But I want this stock. Well, sometimes you can't have your cake and eat it too. Again, you're not buddies with Gary Gensler. You're not Sam Bankman-Fried. You're probably not going to get your cake and eat it too. With that, my friends, I really hope that this comes across the right way. And the right way is, I like to kind of poke fun at my fellow human beings in a way for doing silly stuff, but I don't want that person to be you. I don't want that person to be you. My buddy Rich said, you're like the town crier or something like that. Like, if I learn information, I like to get out there and share it with my fellow human beings. This stuff can change your life. It might not change your life fast, but it can definitely change your life. And what's going on with the world, prices rising and all this type of things, and Sam Bankman-Fried and Bernie Madoff and all these other crappy scams. What about all those SPACs that happened? Forgot what that dork's name is that was on getting all this internet clout. He's like, this SPAC, that SPAC, Chamayev or whatever. Where's that loser at now? He's pitching something else, man. Don't be the patsy. The people that were falling for these SPACs, they're patsies. A lot of people in 401ks, not everybody, but a lot of people in 401ks are patsies. There's just a lot of patsies in the stock market. Nobody cares about your money but you. So please, not for me, but for just all humans in general. For you, maybe motivated by yourself, your family, whatever. But I'm putting the message out there because I care about my fellow human beings. With that, my friends, you have a fantastic night. Aloha.